So we split the entire transaction according to the fundamental rules. We say golden rules, that is a personal account, real account and nominal account. Once you prepare a trading account, we arrive the gross profit or gross loss, then we move on to profit and loss account. Stock destroyed is 13,000. How much you receive? 10,000. How much you could not receive? 3,000 will appear on the debit side of profit and loss account. Hello my dear student, I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Fundamentals of Financial Account, First Semester, Unit 3, Session 1 of BCom, in favor of Final Accounts of Sole Trading Concern, Specimen and Format. So today I am going to discuss the most important chapter called Sole Trading Concern, Single Man Business. Here we are going to prepare the final accounts. In the final accounts, we divide entire final account into three groups. One is called trading account, one is called profit and loss account, one is called balance sheet. Which are the three items are? Number 1, trading account. Number 2, profit and loss account. Number 3, balance sheet. Trading account gives the result of gross profit or gross loss. Profit and loss account gives the result of net profit or net loss, whereas balance sheet is not an account. It is a statement of assets and liability. This is one of the important chapters which you are going to discuss. So we will get about for 15 marks. Final account, an account which is prepared at the end of the year, is called final account. Here, the entire final account is going to divide into three groups. One is called trading account, another is called profit and loss account, another is called the balance sheet. So trading account gives the result of gross profit or gross loss, whereas profit and loss account is prepared to find out the net profit or net loss, whereas a balance sheet is not an account. It is a statement of assets and liability which shows the financial position, that is, asset minus liability is equal to capital. So before going on, we have got a format of final account. I will give you and explain. After that, we saw one problem in this session. Before that, how they are going to deal with, I will tell you. So we will give the trial, first one, we will give the trial balance. In order to prepare final account, first we will give the trial balance. Trial balance has got particulars, debit, credit, followed with rupees. Here, in our transaction, there is a word called business cycle. First, we have got a business transaction. This one's called business circle. Here, first we have got business transaction. Then it leads to journal. Then it leads to ledger. This leads to trial balance. Then it leads to final account. How it will be? First is the business transaction, leads to journal entry ledger, where you are going to prepare on purchase book, sales return book. First, whatever the journal entry part, that will go to ledger. Then we prepare the what's called subsidiary books here. In the ledger, we prepare subsidiary book. Here, journal, ledger, subsidiary books. In the subsidiary books, we are going to prepare purchase account, purchase return account, sales return account, bills receivable account, bills payable account, and cash account. Which are the cash book? One is called purchase book, sales book, purchase return book, sales return book, cash book, bills receivable book, bills payable book. Then we prepare that trial balance with the help of the ledger. What is trial balance? I'm going to say that. Then we have got a final account. Now, before going to final account, we prepare an account called trial balance, which has got a two side. Debit side shows the expenses. Credit side shows the income. So, debit side shows the expenses, credit side shows the income. Debit side shows the assets. Credit side shows the liabilities. Here, trial balance, we have got a two side. One is called, debit side is called expenses, credit side is called income, debit side is called asset, credit side is called liability. Trial balance is prepared to know the arithmetic accuracy of books of account with the help of the ledger. First, we have got a journal entry to ledger, ledger to the trial balance, where the trial balance has got a two side. One is called the debit side, one is called the credit side. Debit side shows the expenses, credit side shows the income. Debit side shows the asset, credit side shows. This is a basic. You must learn this. So, both the sides should tally. This is taken from ledger. Ledger is taken from journal entries. So we split the entire transaction according to the fundamental rules. We say golden rules. That is a personal account, real account, and nominal account. What the personal account says, debit the receiver, credit the giver. What the real account says, debit what comes in, credit what goes out. What the nominal account says, debit all expenses and losses, credit all gains and income. On the basis, we have a transaction, transfer to journal to ledger, which has got a subsidiary books also, ledger to trial balance to final account. So based on which trial balance has two sides. One is called debit side, one is called the credit side. Debit side shows the asset, credit side shows the liability. So this is the basic. I will tell you the format. Which are the accounts we are going to prepare? One is called trading account, another is called profit and loss account, another is the balance sheet. I will give the format of the trading account, format of profit and loss account, and a balance sheet. We'll move on to format. Here the trading and profit and loss account for the year ending. It starts with the opening stock. This is a closing stock of the last year, become the opening stock. Purchases return should be deducted. Then we have got a wages, then we have got a carriage inward, then we have got a freight, then we have got a power, then we have got a manufacturing expenses, coal, gas and water, which are directly connected. Come back to credit side. We make the sale. If there is any return, that should be deducted. Closing stock. If there is stock destroyed separately, we have to show. So, which are the items are? It starts with the opening stock. This is a closing stock of the last year become the opening stock for this year. Then we made a purchase for this year. If the goods are not up to the mark, it will be returned. That's called purchases return. Then we have got a wages. Then we have got a carriage inward. Then we have got a freight. Then you have got a power. Then you have got a manufacturing expenses. Then coal, gas and water. Salaries or sales return. Closing stock destroyed. Whatever the difference comes, this is a gross profit. If the credit side is more than the debit side, the difference is called gross profit. If the debit side is more than the credit side, it is called the gross loss. So once you prepare a trading account, we arrive the gross profit or gross loss, then we move on to profit and loss account. By gross profit brought down, whatever the income you have, debit the losses, credit the gain. By gross profit brought down, by interest on investment, whatever we received, by discount received, by rent received, by interest on drawing. Come back to debit side. Two gross loss brought down. Salary, if there is an outstanding is there, that should be added. Whatever the outstanding you add, that will come on the liability side of the balance sheet. Rent paid, then electricity charges, insurance minus prepaid, that should be deducted here. That should be deducted. Value carriage outward, advertisement, then discount allowed, printing and stationery, post and telegram, all expenditure. Loss on sale of stock, I will explain. Depreciation on asset, interest on capital, bad debt, plus new RBD minus old BD. What's the formula? Bad debt plus new RBD minus old RBD. Whatever the RBD appears in the trial balance is called old RBD. Whatever the RBD appears in the adjustment, that's called new RBD. Then you have got a net profit. Then you have got a balance sheet. Here, cash in hand, cash at bank, bills receivable, closing stock, due from insurance company, machinery, minus division. Here, move on. Then here, liability side, creditor, bills payable, bank loan, outstanding expenses, capital, it may be outstanding salary, outstanding rent, outstanding wages, capital, opening balance, add interest on capital, add net profit, minus drawing, minus interest on drawing, minus net loss. That should be deducted. Then here, furniture, building, motor car. If there is a depreciation, that should be deducted. Investment, goodwill, prepaid expenses, debtor, minus new RBD. So balance sheet should tally. Here, regarding the stock. If the stock destroyed, is rupees 10,000, insurance company admitted the claim rupees 8,000. This is will be the adjustment. What is the total value of the stock destroyed? 10,000. 10,000 will appear trading account credit side. How much money we are going to receive? 8,000. That will come on the, see that will come on the asset side of the balance sheet as due from insurance company. What's the total amount? 10,000. Trading account credit side. How much you receive? 8,000. That will come on the asset side of the balance sheet. The difference 2,000 loss. That loss will appear on the debit side of profit and loss account as a loss on stock. I will repeat once again. The full value 10,000 will come trading account credit side. Whatever the amount we are going to receive, 8,000 will appear on the asset side of the balance sheet. The difference is a loss. The loss will appear on the debit side of the profit and loss account. If there is a 10,000, entire amount is accepted by insurance company. No loss, no gain. That time 10,000 will come in the trading account. 10,000 will come on the asset side of the balance sheet. No loss, no gain, no effect to profit and loss account. This is a format. We'll go to the problem now. The following is the trial balance of Santosh Trader as on 31/3/2014. So drawings and capital, building, stock, opening stock 1,20,000, debtors and creditor, purchase and sale, furniture, investment, wages, advertisement, freight, return. When you say debit side, it's called sales return. This is called purchase return. I will repeat. Purchase will come on the debit side, sale will come on the credit side. Debit side, sales return. Credit side, purchases return. Salary for 11 months means 1 month outstanding. Rent for 13 months, 1 month is prepaid. Insurance and expenditure, carriage inward trading account, carriage outward profit and loss account, bank overdraft is a liability, interest on overdrafts and expenditure, interest on investment is a gain, discount, this is allowed is a loss, 8,000 is a gain, selling expense and expenditure, general expense and expenditure, bad debt means irrecoverable money, cash in hand is an asset. I'll repeat. Drawings and capital, liabilities of the balance sheet, building is an asset, stock means opening stock trading account, debtor and creditor, debtor is an asset, creditor is a liability, purchase and sale trading account, furniture is an asset, investment is an asset, wages trading account, advertisement profit and loss account, freight trading account, return means trading account, debit side sales return, credit side purchase return, salary will come profit and loss account, rent will come profit and loss account, insurance profit and loss account, carriage inward trading account, carriage outward profit and loss account, bank overdraft is a liability, Interest on overdraft is an expenditure. Interest on investment is again profit and loss account. Discount allowed is a loss. This is 13,000 is a loss. Profit and loss account debit side. 8,000 is again profit and loss account credit side. Selling expenses, profit and loss account debit side. General expenses, profit and loss account debit side. Bad debt is a loss, profit and loss account debit side. Cash in hand is an asset. We'll move on. Solving. Closing stock 1,35,000. Create new RBD 5% on debtor. Division on building at 10%, on furniture 15%. Stock destroyed is 13,000. How much you receive? 10,000. How much you could not receive? 3,000 will appear on the debit side of profit and loss account. Purchases to the value of 5,000 on 28 had been omitted to be regard. So when it is record, omitted means it is a credit purchases. That should be added to purchases. Then it should be shown on the liability side of the balance sheet as a creditor for purchase. What to do? It's an omitted item. You see nothing but a credit transaction. Add to purchases. Then it will appear on the liability side of the balance sheet. We'll move on. Opening stock, we have got 1,20,000. Purchases 4,80,000. Purchases return is 10,000. 4,70,000. Add purchases omitted. This is your 5,000. Become 4,75,000. Wages is 35,000. Freight is 10,000. Carriage inwards are 12,000. Come back here. Sales 7,40,000. My sales return 20, it becomes 7,20,000. Stock destroyed totally 13,000. Closing stock is that 1,35,000. Here credit side is more than the debit side. Credit side total 8,68,000. 8 lakhs, the difference will come 2,16,000. Here you must be careful. Purchases minus purchase return, add purchases omitted. This becomes 4,75,000. Now come back here. By gross profit brought down, by interest on investment is a gain, by discount received is a gain. Come back to debit side. Salary 22,000. It is for 11 months. 22,000 divided by 11 into 1 is 2,000. This is plus 24,000. Rent. This is for 13 months minus prepaid rent. 7,800 divided by 13 is 600. So how much paid more? 6,000. Real amount is 7,200. 1 month more, 1 month less. Insurance is an expenditure. Advertisement in expenditure. Carriage outward is an expenditure. Interest on overdraft is an expenditure. Discount allowed is an expenditure. Selling expenses is an expenditure. General expenses is also an expenditure. Old back date in the adjustment. You see the back date? 1,700. What's the formula? Back date plus new RBD minus old RBD. Here, come back here. Your back date is 1,700 plus new RBD 4,000. It is 5,700. There is no old RBD. Loss on stock by fire is 13,000. Out of 13,000, 10,000 received. How much you would not receive? 3,000. Then division on building 10%. 80,000 to 10 by 100 is 8,000. Division on furniture 26,000. 15 by 100 is 3,900. So your credit state total is 2,30,000. The difference will come 1,17,700, which is considered as a net profit. We'll move on to balance sheet now. Your building value is 80,000. How much depreciation? 8,000. Today's net value is 72,000. Your furniture value is 26,000 minus division 3,900. It becomes 22,100. Your editor is 80,000. Your new RBD 5% on this is 4,000. Data to be received is 76,000 from our customer. Investment is an asset. Cash in hand is an asset. Prepaid rent. We have paid for 13 months. Actually, you are doing only for 12 months. 1 month is prepaid. That is 600. Due from insurer out of 13,000. How much you received? Only 10,000. We are going to receive. Closing stock is 1,35,000. This becomes the opening stock for the next year. Come back here. Your capital is 1,75,000. less drawing 20,000, add net profit, it becomes 2,72,700. Bank overdraft 30,000, creditor 51,000, add credit which has been omitted 51 plus 5, 56,000. Then outstanding salary 2,000, so it will tally for 3,60,700. So regarding the stock destroyed, the total is 13,000. How much recover? 10,000. How much could not be recovered? That 3,000 is a loss on stock. This is very important. So format capital, opening capital, add interest on capital, add net profit, minus drawing, minus interest on drawing. Any outstanding should be added, then it will come on the liability side of the balance sheet. Any prepaid should be deducted. It will come on the asset side of the balance sheet. All things based on trial balance. I told trial balance, debit side expenses, credit side income, debit side asset, credit side liability. This is a good base. First we have got a business transaction, transaction to journal, journal to ledger, ledger to fund. We prepare the trial balance. Trial balance has two sides. One is called debit side, another is called the credit side. Debit side shows expenses, credit side shows income, debit side shows asset, credit side shows the liability. Based on that, we are going to prepare a trading account, profit and loss account, and a balance sheet. Here, trading account gives the result of gross profit or gross loss. Profit and loss account gives the result of net profit or net loss. Whereas a balance sheet is a statement of assets and liability. So we are going to prepare final account which have been divided into three groups. One is called trading account, one is called profit and loss account, one is called the balance sheet. Trading account gives the result of gross profit or gross loss. Profit and loss account gives the result of net profit or net loss. Whereas a balance sheet is not an account, it's a statement of assets and liability. So all these final accounts based on trial balance. I told trial balance so many times. Trial balance shows the arithmetical accuracy of books of account, which has got a two side. One is called debit side, and it's called the credit side. Debit side shows the expenses, credit side shows the income, debit side shows the asset, credit side shows the liability. Based on this problem has been solved. Then if you have got a doubt, you can make a comment, we'll give the answer. So all this we must be very careful. One question will become from the examination mark 15 marks. So we'll have some more problem in the next session. Till then, goodbye. Meet in the next session.